So, hello everyone. Welcome back. A warm welcome from Munich. We're again here with another new episode in our Digital Traders Summit series, and we have a great guest with us. David Linton is again joining us for this session. He was already contributing to a very exciting episode we had before our summer break, and 8 weeks later, I think it's time to check on some of his prognosis. And 8 weeks, how things turned out. And I think overall it's a good time to check on the energy markets. We have seen a little bit sluggish trading over the last months, where we most probably see lots of hesitation as well. Some markets being undecided, gas markets slowly climbing. I think that's a very good time now to look into the charts with David. And again, as last time and always, you are asked to join and contribute to the session. So please use the chat or the Q&A functionality of the Zoom call to ask your questions or make comments. I will try to pick them up. We can do this within the presentation if it fits in the line, or we collect some questions at the end. So please contribute and make this a interactive session as much as possible. Thanks. And now I'm handing over to David, founder and CEO of Updata. Thanks. Great to have you here.
Thank you, Jens. So as Jens just said, the market has been quite quiet the last few weeks. There's a few things that have changed, and probably I want to talk about that. I always start by reminding everybody that we need to think about time horizons. So when I say something is rising, it might be that generally I'm talking medium term. And so I'm talking about the next few weeks, the next months, by the end of this year. So that's my medium term time horizon. Last time we did this, it was about 10 weeks ago. And it was very much with this time frame in mind. So we're thinking now in the run up to Christmas. And that's generally where I'll be talking. So it's quite likely that we could talk about something going up, and then over the next course of the week, in the shorter term, it is falling before it is rising. It's always just really important to remember about time horizon. So what's changed? And in fact, I left this slide from last time. So this is how the markets looked last time. We had the US stock market just trying to make new highs on the S&P 500. The NASDAQ was already doing that. We had the VIX volatility quite high compared to where it was last year. This is, of course, the fear index for global markets. Gold hadn't yet made a new high. Chinese stocks had broken out, and the dollar was holding up just, but it had fallen away quite heavily. So this is how the picture's changed up until a couple of days ago. So we had the S&P 500 index actually did go on to make a new high, and it pushed quite a lot higher. But then we've had quite a heavy fall over the last several weeks. So we've got things like US election fears, second wave of the virus fears coming in. And so we're seeing stock markets, the NASDAQ, which has had an incredible performance, stocks like Tesla going up sixfold, Apple and Amazon making new all-time highs each week. We're starting to see this trend breaking down. So that's something that we do need to bear in mind. And we saw that, of course, the markets capitulated strongly in February, March, and we saw big moves in all asset classes. So we're seeing downside targets for the US stock market, potentially somewhere between 10 and 20%. 20% is possible. And of course, if we get a 20% fall in stock markets in the US, this will lead to sentiment changes. We'll see increases in the VIX volatility, fear goes up, and the global macro situation changes. Gold did actually go on to make a new high, we see on this chart, but it has pulled back quite significantly. But the fact is, gold is a proxy for fear. So if we see gold making new highs again, that's another sign that we just need to be aware of. Chinese markets held up, but it is coming back a bit. And the dollar did go lower, but it has found a floor. And in fact, last week was the best. This is a weekly chart. This is the weekly candle for the dollar. Last week was the best week for the US dollar that we've seen since March. And of course, the dollar is very important when it comes to commodities, because most major commodities are priced in dollars. And if the dollar rises, generally speaking, commodities will fall. There is this inverse relationship. So the dollar is something definitely to keep an eye on. But on the whole, the picture is not massively different. Probably the big thing is stock markets potentially just not making a new high. So we need to just be concerned. And I think in the run up to the US election, this is probably a big factor. We saw the debate the other night, and the market is more fearful of not a clear result, and that's looking quite likely. So that uncertainty will create some turbulence, I suspect, in the coming weeks and months. So that's the macro backdrop. And again, this is when we last spoke, and I voiced concerns 10 weeks ago that the crude oil price it had recovered very strongly from its low point in April, and then was starting to run out of steam. And that was it wasn't a bearish sign, it was just a concern. But since then, we have seen crude oil starting to break down. And in fact, we were bearish to clients this week on Brent crude, and it fell by about 3.5% on Tuesday. We've just rolled into the new contract, of course, but the key thing is we are seeing the potential for what we call in technical analysis, the lower high and then a lower low. So if we see Brent crude below $40, that psychologically becomes important. And if we break below 39.40, that's the level at which we found support last time. If we break below that level, that is the lower low. And the way to think of that is that all the people who bought crude oil from that low point now are underwater. And this is really why technical analysis works. Traders are now starting to nurse losses, and they've got to start thinking about whether they close positions or watch those losses potentially increase. That's why support and resistance generally works. So I am slightly bearish on crude oil at the moment. We've got downside targets back to around $30. There's a medium-term one to $38. If we make new lows below that low, 39.40, let's say $39, we make new lows, then Brent crude is going back into the low 30s. And of course, that potentially has an impact on much of the energy mix, especially gas. So this is what the Brent crude chart looks like. Here's that support level I talked about, 39.40. Of course, if we make a new high, this is at about $44. If we make a new high there, then that's good news, because all of these bulls who bought here are confirmed. All these bears are not confirmed, and we could see the oil price continuing to run. So at the moment, like many charts, we are in this range. And in fact, when we look at a lot of the energy charts today, we'll see that we're range bound, and we're waiting for the next move. Is it going to be up or is it going to be down? So I just will look quickly at coal and emissions before I go on to power and gas, and gas and power. So coal, my daily targets, my 60-minute and 60-minute targets, and my 1 minute. So this is what I expect to happen very short term. So on a daily chart, there is resistance. In fact, we're at the same level roughly that we were when we spoke 10 weeks ago. So coal hasn't risen any further, but it has held its trend pretty well. And so that's quite interesting. Coal does have more upside potential, but we might see some resistance at around this $61 mark, which is where we're touched near now. So coal is probably one of the more steady energy contracts. We're seeing that rising. Emissions, you'll remember when we talked about this last time, I was very bullish on the very long-term picture for emissions. That hasn't changed, but we are very much stuck in this range between 25 euros and 30 euros at the moment. And we've seen short-term downward pressure towards the bottom of the range. We've seen some shorter-term support around 26 euros. If we fell through 26 euros, I would be quite concerned that we're then going to 25 euros. And of course, if we fall through 25 euros, that starts to change the long-term picture for emissions. I don't believe that's going to happen. I think this is what we call a consolidation pattern, where we have a rise, we go sideways, and then we would expect to break out and do a similar rise all over again. So long term, we are still bullish on emissions, but we need to wait for a break of around 31 euros to be confident that we're going to run levels.
Last time you had seen the longer term targets around 70, is that right? You were that
Yeah,
kind of
they're still in place. They're still in place. If we fall below this 25 euro level, we then start to negate some of those upside targets, because if you like, this buying wave that generates that next target level starts to become negated. And what happens is you start to have people who are sitting on profits back here. You need to remember there's lots of different participants in the market, lots of different who've entered emissions contracts at lots of different price levels. And so if we start to fall away, that starts to create pain where people, it turns more, sentiment turns more bearish, because traders are starting to nurse losses. And so, yeah, so what I'm saying really is that the long-term targets and potential for emissions changes if we fall below that 25 support level. 3 days below 25 euros, and my view on emissions would change.
All right. Yeah,
one of the great advantages of being a technical analyst is when you got it wrong.
Very good.
Yeah. So so at the moment, emissions it's a range trading situation. So for traders who are trading carbon, you're trading the range, and then if we break out, then it's back into a trending situation, and that's a different scenario.
But do you expect something to happen now pretty soon? I mean, it's the sidewards
development. Well, I learned, as I say to my girlfriend, don't expect and you won't be disappointed. It's too hard to say when. I mean, this is the $1 million question, of course, when, but it's just when it happens. One thing I am just a little telltale sign is that we were testing this 25 euro level back in July, August. We're now testing 26 euros, and that's higher. So this is the beginning of what we would call a basing pattern, or a higher low. So it is pointing towards a move out. But I think, the contract rolls in December. I think we could see a breakout before Christmas.
Okay. Good.
So global gas markets. So this chart on the left is the sort of major gas contracts globally, all normalized and priced into MMBTU and US dollars. So we're comparing apples with apples rather than apples with pears. And what it shows is the recovery in Asian gas has been very strong, and European gas has gone with that. US nat gas has undergone quite a bit of a change. I should also say that US nat gas has seen a lot of volatility in the front month contract. So, and this is the front month contract. So if you look at the more dated contracts, month 2 and month 3, we haven't seen the drawdown in those contracts towards expiry. So gas has been very volatile the last few weeks in the front month as we've neared expiry. And those are about storage pressures and uncertainties in the US. But what we also, whilst this recovery looks pretty good, and at the moment it's hard to say that it's going to roll over, like we've seen the oil price doing. We do need to remind ourselves that over the very long terms, like 15 years of gas prices, over the very long term, we've seen lots of failed recoveries longer term in the gas price. So any recovery here, regardless of the COVID, remember these charts were falling well and truly before the COVID crisis. These were last year. So gas has been in decline, for a long time. And so this might be just like a reactive recovery where we're seeing, prices got so low that buying has come back in. But for the moment, the recovery is well and truly underway. I think, will we do the same thing as we've done in the last 6 months in the next 6 months? Probably not.
So you expect a continuation, but not to the same extent. No.
Yeah, I mean, it's a very hard call. I mean, if we look at the contract, when we were looking at winter gas, seasonal gas and TTF 10 weeks ago, it was at 12 euros, and we've been as high as 14. So that's nearly 20% increase in 10 weeks. So markets have been rising. But there is a lot of fear or concern in the market. It has got that ability to keep doing that. And we are seeing upside targets as high as 15 euros potentially. And so, yes, we do see it going. But again, it is right at the moment we're hitting the August resistance, and it's hard to say whether that's going to continue. If we look at this was the chart that we actually drew 10 weeks ago. With all the forward curves on, and this is when we were at 12 euros, and we're now, at 14. So we've done a lot of what that forward projection was saying. And if we look at the front month contracts, this is MBP's recovery. It's when you look at the falls that we've seen over the last several years, the recoveries. It's great. When you look at the lows that we were seeing way back, it's great. But the reality is we are still in a very long-term downtrend. And this is TTF. This has actually looked a little bit better. And this has been making new highs. So on NBP, we're struggling to get above those highs, whereas on TTF, we are. So, and this is NBP now. So we are seeing potential for prices to go higher. We've got one target to 40, which is 20% higher on NBP. We have got some downside targets. There's quite a bit of uncertainty. But at the moment, the recovery in gas prices is pretty much underway. I did just look at some of the other gas hubs, and the real problem, and we'll come on to this when we look at power markets, the real problem, once you get away from TTF and NBP, Gazpool and NCG are not too bad, but once you get into big gas, Italian PSV, you're starting to enter areas where the liquidity just isn't as good. So that is a factor when you're trying to analyze those prices. And what I've done here, I've actually overlaid some modeled data, and I'll explain this in a minute. But all it tells me is that prices are following each other pretty closely. So stick to analyzing TTF, because that's going to help you with the other gas hubs. There's a very strong relationship and correlation, obviously, between those hubs. And it's just that Italy tends to be a little bit different. It's just trades at a higher level, and there's more volatility in the Italian price. But on the whole, if you're analyzing any gas markets in Europe, you're best to just put your effort into TTF. And those prices, so people can understand, I'm taking these model prices from EOX Live, which is broker data, and it's modeled. So they're producing curves. So these are the curves for those hubs. And the curves that they're producing from those hubs, behind every curve update daily, you can then model how the curve price has changed to effectively get a price chart. So this is quite useful when we want to get to some of the European power markets that we don't have any data for. We can do it from the modeled curve data to get a synthetic price, if you like. So we're now looking at power markets, and these are all the power markets that they provide curves for, and these are all the curve prices and how they've changed. So it gives me effectively a price chart. Nordic power is very different. It's because of the hydrology aspect of Nordic power, it's just the odd person out. But what we're seeing here is German power is the base. This dark line is German power, and all the other power prices, roughly speaking, follow German power. So 90% of my analysis of European power markets will be in German power, because if I know exactly what German power is doing, that's going to tell me what the rest is going to do. So I go to German power. And this really, Jens, comes to your point about markets at the moment. So this is the daily chart on Cal 21 German baseload. And what we're seeing here in technical analysis terms, we call this an ascending triangle. This is where you're seeing progressively higher lows, and that's traders in this market are progressively prepared to pay more for German power. And you're seeing this resistance where the price just doesn't really want to get above 43 euros. It's just stuck there. But we are seeing targets higher, and the shorter term 60-minute chart has turned bullish again this week. So this pattern is a bullish pattern, and we would expect a breakout. So normally the rule of thumb is the height of the pattern. So here it's about 10 euros. The height of the pattern gives you the next move, so another 10 euros. So we're seeing potential for German power to go to 50 euros over the coming months. Not before Christmas, I wouldn't say, but certainly over the next several months. German power, I can see it breaking. Once we break 43, a few days above 43, I think German power will go much higher.
Very interesting, yeah.
And so that's what traders have to watch. This is a very long-term chart. This is a 1% point and figure chart. This was the low point 3 years ago, where we were right down. This is rollover adjusted, but we were right down in the teens. This level of support was generated then, and we've been finding this support. So this fall away that we've seen in the last 2 years, we've fallen back to a support level, and there's lots of support for the market. So I take a lot of heart that we will see the market finding support here, and we've got a target of 49 euros. And there's a one here which everyone's going to get very excited about, which is 72 euros. And I always say to people, and these targets always look a little bit hard to believe, but when we were right back here, we got targets to 32, which we got to 43, which we got to 49, which we got. So, you know, and these targets at the time just looked really hard to believe. If we break this high level at around 60 euros, then, you know, we're really going to run, because we're hitting multi-year highs. But the one thing is not to get too excited about 72 euros, because realistically, we've got to get through 43 euro mark first before we can then get to the high 40s. But the long-term picture for German power, I still think is very good. This chart is this is more a data visualization than technical analysis, but it just allows people to think a little bit out of the box. So the blue line is German power now. The red line, I've just literally picked up a copy of the blue line and put that low back there and said, well, if this is a new low, how does it look if we do the same thing all over again? It's very hypothetical. And that gives you levels around this sort of 60, 70 euro mark in around 2023. So, you know, we're talking 2 to 3 years to get to those sorts of levels. But of course, if you're trading forward into the longer dated contracts, the prices, this is the forward curve overlaid. This was the forward curve a year ago. So, you know, forward pricing is still pretty attractive, and there's got to be scope for arbitrage for traders there between what the forward prices are and what the market potential is. So I just highlight that.
Yeah.
So let's look at other power markets. But as I said, the German power backdrop is really the most important thing. So this is French power. So what I'm always looking for, so we see here on versus the German power chart, there's a lot of liquidity in the 60-minute data. These are the 60-minute candles. If we get to French power, the 60-minute candles don't have much weight in them. So there's much less liquidity in French power than there is in German power. And so that makes it a bit harder to analyze. And that means that I'm looking much more closely at the pricing levels, because you know, those even in illiquid markets, the pricing levels are the most important thing. So French power is sort of stuck between 43.90 and 49 euros, and that is a bit of a range at the moment. And there's also a mini support at around 46.50, which we're testing at the moment. So it's not quite as clear as the German power chart, where we had that beautiful triangle, but it is still trending up. And of course, if German power breaks and really runs, then it's hard to see that French power would do something different. This is Dutch power. So we've got, again, range between 37.95, let's say 38, and 42.75. That's the range at the moment. Again, you see the liquidity is less good here. And then we go to Nordic power. Not at all like the German power chart. Remember, we were trending up. This has really been stuck in a sideways market. Nordic power has really underperformed. Maybe some signs that it might improve with just coming through the cloud on the short-term chart, but this has really been held back. So it's a very different looking chart. And whilst we're sort of this side of Europe, we'll also look at UK power. This is the seasonal chart. We are seeing potential 10% higher, but at the moment we're sort of 49 and 53. And again, a lot of these contracts rolling today, so that's makes the charts a bit challenging. So now I want to go to Central and Southeastern Europe. I think we've got quite a lot of viewers today from the region, so hopefully this will be valuable, and we'll just quickly run through that, and then we can answer some questions maybe. So this is Czech power, and this is derived from broker prices, OTC. This is from Icon, Refinitiv Icon. So we're seeing here, again, very different from the German power chart, not much liquidity even in the daily candles and very little in the 60-minute candles. We do have a couple of downside targets, but this 47.30 level is pretty important. 48 would even be better, but 47.30 was the high we made in July. We need to break out on Czech power to do that. And of course, if German power breaks, then I would expect Czech power to do the same. This is Hungarian power. And what I've done here is I've overlaid German power, which is this blue line, and Hungarian power, which is much less liquid. And then I've charted the spread between Hungarian and German, and we're seeing how the spread has been changing. So the spread between the two was increasing at the start of the year. Then it was going sideways, and now it's decreasing. So Hungarian power is coming back towards German power in terms of its pricing. And what we're seeing here is that the correlation between German power and between Hungarian power and German power, this is the rolling historic correlation, it was very strongly correlated for much of the last year, but the correlation is now at about 50%. So it's still positively correlated, but it's not doing exactly what German power is doing. So that correlation and the spread can be obviously very helpful if you're trading those power markets. But the problem here is liquidity. If you want to get to price targets, so you can't ignore what German power is doing basically in any of these markets, obviously. This is the 60-minute chart, and it's even less liquid. Here we see that trend in the spread narrowing, and the correlation just coming down slightly. Mm-hmm. I've just had a quick look at spot markets as well. These are daily spot charts. Most spot traders will be looking at real-time spot charts, but it highlights again that we see a lot of liquidity in the major markets, and we don't see much in the spot markets. And prompt markets are very difficult because obviously the prices change from one day to the next quite dramatically. But I just do a quick reference to that. So now I want to look at some really illiquid markets. And again, I've used this data from EOX Live. This is their power curves. And you need to remember, so you need to imagine these are the calendar contracts. And behind each calendar contract is effectively a price history of how that curve price has changed. And so that then gives us the ability to look at prices. So this is Romania, for example. And based on that model data, I can say that 46 and 51 is the price, that is the range that Romania is trading in based on that model data, because they don't have, there's no trade data for a lot of these markets. So all I can look to is model data, which will be based on sporadic trade data. So it's less accurate, and in all our charts here we say model data. And here again, this is this chart is model data. This is the spread between the model data and actually live German power data. So it's a spread, and then that's a correlation. So again, we just understand how that's moving, and we can produce targets. So these markets and most Central and Southern European markets are not looking as clear as German power because the liquidity isn't there. So that's just an example of one market, and I could easily look at others, but it all comes down to German power basically.
Great, David. Thanks a lot. I use the occasion now to ask as well for the audience to put some questions or comments in the Q&A part. So happy to receive some questions more and address these. Let me have one question myself for the beginning. We've seen that the spreads between TTF and other European gas hubs have been smaller now. From the technical point of view, are there some underlying reasons for that these spreads simply get lower, or is this kind of as well self-fulfilling prophecy in a way because everyone is looking at TTF right now, and because it's so dominating from its liquidity?
Yeah, so if you're seeing the liquidity reduce in the other gas hubs, that drives liquidity to the most liquid place.
Yeah.
So if the liquidity is drying up in some of the other hubs, that means that really, if you want to trade, you'll go to the more liquid hub. And that's if you're laying off risk again, because you'll get the movements showing up first in the liquid market. So you'll get the targets and the trend breaks and all of the things that we'd want to see technically happening in that market first. That does potentially create an opportunity, because if you believe those markets are strongly correlated and the spreads have narrowed, then you may see the ability to see a break or a move in TTF that then gives you a chance to trade another gas hub before that move presents itself as a result of that move in TTF. But if you want, from an analysis perspective, if the markets are not very liquid, you really need to be doing your analysis on those liquid markets.
Absolutely. Good, understood. So questions, please put in more. We could still have time to answer these. There was one question I can take quickly. Is your analysis based on what are the data sources? Is it enmacc or is it Refinitiv? No, I can say it's not yet enmacc because we are not providing to the outside so far our trade data. We discussed that, David.
Yeah.
How we can do that, but for the moment, no, we are not handing out our trade data.
Yeah, but this is everyone's big challenge, of course. Data, especially in OTC markets, data is a really big challenge, and to make trading decisions, you need the data. So it is. That's why we have to go where the liquidity is. I'm using mostly Refinitiv prices. I've been using some of the model data from EOX Live. Sometimes use Montel. I'll be looking at EEX data there sometimes. But the data's all over the place, and that's one of the major challenges.
Yeah, we feel as well that we may contribute to that because we have some trades in really illiquid markets already. This is our specialty, if you wish. So, and we feel as well that as a company, we wish to give this back as well for technical analysis and other uses, but it simply hasn't been really in focus for us so far. So more to come from our side.
Yeah.
One more question.
I just add to that as well that energy traders have got a real challenge because on top of all of that, there's all these macro considerations to consider as well, and there the data is good. So making sure you get your macro analysis right, and then crude oil, liquid areas, and getting all of that right. If you've got all that right, then you can start to make some decisions on the less liquid markets with all that knowledge built in.
Yeah.
Sorry,
Great. There's one question which is a little bit macro politics even. Do you see an effect of the chart since the conflict between Armenia and Azerbaijan is going on?
I can't say I have. And I'm guessing we're talking a little bit about crude here. I can't say I have. The chart represents everything that everybody already knows about the market. So if it's not showing up in the chart, you know, a lot of people can point to a chart and say that's because of this or that's because of that. You know, classic example is crude oil fell on the virus. Well, actually, crude was already in a downtrend. So, this was before the virus was really hitting big time, and then it plummeted. So it was susceptible to bad news because it was already in a downtrend. We often say bad news happens in downtrends and good news happens in uptrends. And so I can't say I can see that in the data, but the price chart will absorb everything that everybody in the market knows, because the trading is everybody's view of the market.
That's it. Let's jump on one more question here. Maybe you can have as well a view on that. What is your view on the API 2 market? Do you see there the possibility to reach the highs from January soon?
So we're talking coal here.
Yeah.
I think it's been a very subdued market, and in fact, if I go to a chart, open up coal. So I'll get a long-term chart up. Here we go. I mean, it has really. Yes. So when I'm on Zoom, sometimes my system seems to freeze. I don't know what that is. Here we go. So here's the coal chart, and coal again has been in long-term decline. So below this cloud, we would be bearish. So we've been bearish on coal for a good couple of years, but for the first time, we've turned a corner. So coal is in recovery mode. But the key thing is, it's got to fight all these previous highs, resistance levels, all the way up. So the coal market will climb a wall of worry. It's hard to see it getting back to these highs. I think there's just a lot that's changed. And we saw a lot of uncertainty around these levels here, $70, $80, and I'm guessing that will be an area that it will struggle again. But for the moment, especially if we can break the July high, for the moment, and of course the contract rolls in coal in end of January, so it's slightly unusual. But if we break that July high, then I see coal has potential to go quite a bit higher.
Great. Let's jump from coal to power back. There's one, I think, interesting question to someone who does chart analysis here. You see the calendar year 21 reaching 50, 60, maybe even 70 euros ahead of us. I mean, this would mean that as well, basically, every single hour is set by lignite and hard coal in these markets. How does that fit together? We have such a big chunk of renewables now, basically driving the markets in terms of volume. How can you explain that in this context?
I can't. Quite simply, I'm purely focused on the technicals.
Yes.
And I can't tell you the drivers, but what I can tell you is there's progressive buying of German power over the last 6 months at progressively higher prices, and there is resistance. That's that triangle we talked about. And once that breaks, it's like a coiled spring. The market has been wanting to go up, and then when it breaks, it just runs to play catch up. Now, it's not going to go straight to 70. That's not what I said. That's a very long-term target of a few years out, and it may not happen. That's just a long-term target. It's too speculative to hang a hat on. Yeah. But if we break 44 euros, then I think, you know, we're going to see it run 5, 10 euros quite quickly, certainly to the high 40s. And of course, as a trader, that's what you're really waiting for, is you're waiting for that break, because those runs happen quite quickly. You know, we saw in May, for example, it went from 35 to 42 quite quickly. And those are the runs you want to try and catch. So I can't give you any meaningful, you know, people who trade power markets and know all of this background have way more knowledge than I do about the reasons. But I'm just here studying the effect on the charts, and that's my specialty. That's what I'm focused on. And I don't think about why things are happening. I'm just watching what's happening. And all I can tell you is if people start paying more than 44 euros for German power on the calendar, then it's going to go higher.
Yeah, no, expected that answer from you. Perfect. We looked already a little bit into spreads between price areas. Now, there's one specific question as well, the spread between German power 21 and Nordic power. Have you analyzed that from a charting perspective?
You can.
Yeah.
And what I'd say about spreads is, if anyone wants to do my technical analysis course, they can contact me. But if you're doing technical analysis in sideways markets, that's when indicators work quite well. So you'd use things like RSIs. And when markets are trending, indicators don't work very well because they keep telling you something's overbought in a rising trend, or they keep telling you something's oversold in a falling trend. And so they keep giving you the wrong signals. But in sideways markets, indicators work quite well. And so for spreads, indicators work pretty well because spreads will tend to be mean reverting. They'll change around a mean, and they'll be in a range. So that's where indicators are quite good. You can, of course, analyze the German power and the Nordic power markets individually. So you can analyze the calendar contracts individually. And we've seen that the German power market, especially if it breaks, if the German power market breaks to new highs, and the Nordic power market, because it is very different and the drivers behind it are very different, the Nordic power market doesn't break, then we are going to see, you know, a potential of that spread opening right out. So that's where, again, as a trader, you have to lie and wait. I always say trading's a bit like landing the plane. You know, if you're a pilot, the time you land the plane is the time you're really paid to do your job. But the rest of the time you're sitting on autopilot. Trading's a bit like that too. We've just got to wait for these breaks, these big moves, and then the spread changes from being trading a range on the spread to suddenly it's breaking out and it's now doing something very different. But yes, you can trade the spread using technical analysis.
Very good. Thanks for the thorough explanation here. And yeah, you referred rightfully to your courses and your books where you find more details.
I'm happy to put anyone on the course for you who wants to learn how to do this. So it's good to share the knowledge.
Perfect. I will do once. I after the second session, I need to jump on your course here and get a deeper knowledge. One more question. Going to the prompt market, because you've shown some charts on this. We mentioned as well the high volatility in these and setting some limits to this analysis. Yeah. Are there other challenges in analyzing the prompt market?
Yeah, it's really hard. And as a technician, the concept that something changes every day so dramatically from one day to the next is really a really hard thing to live with. But so what I would say on prompt markets, especially, so if you were to look at, I go to maybe German power, I probably have a prompt market. My screen is, where have I got a prompt market? Yeah, so here is German power today. This is off Refinitiv. So we see how it jumps around. So there's not much you can do from one day to the next, but what you can do is just watching the line. So the chart becomes quite important, just watching today. So again, it's all about levels. So if you move below a level, that's a worry. If you move above a level, because there is trading going on in this line. And so I would just use in my first module of my course, what I call Dow theory, is just understanding levels. So you can use charts to trade prompt markets. German power is probably the best, obviously, because a lot of the other prompt markets don't really move or don't have many price changes. So it is possible, but you can't really do meaningful technical analysis with indicators and all that sort of thing. You've got to basically just watch the chart and use the very basics of price resistance and support.
Mm-hmm. Lots of the market is driven by algos. How does that fit together? Is there do you take this in mind when you think about this kind of these lines and levels?
Yeah, well, don't forget algos are human beings, effectively. They're just someone's human idea that's been machine coded. So unless you've got artificial intelligence where the machine is truly building its own intelligence and getting away from the human intervention, which we're not really seeing yet in energy, at least, you know, it's a fact that there's pre-programmed trading ideas, and we're seeing a lot of that with our clients. I mean, I'm probably seeing an inquiry every day from you know, somewhere about helping clients develop trading ideas, and we've got over 1,000 different trading algorithms written out of the box, and different people are starting to do this. We're seeing it more and more, but it doesn't change the fact, especially in the illiquid markets. So the algos might be trading, you know, they'll certainly be trading in the liquid gas markets and possibly power, but German power, but in the illiquid markets, it's not really going to work.
Yes. Excellent. David, I think we come to an end. I have to thank you again. Very interesting, very exciting. We'd love to invite you directly for the next session in 8 weeks' time now, so we can have this kind of check-in regularly and see how the markets are developing. We have already planned for the next week some more sessions. I will announce that again on LinkedIn and on the platform. So I can really invite you all to join us again. I'm happy to see such a turnout every second week. I'm really happy. And I know we have to thank our great guests like David. Thanks a lot again, and hope to see you all together pretty soon. And there was one question regarding recording. Yes, usually we record the sessions, and you can find them. We send out after the session the link, so you'll find these recordings on Vimeo if you missed something or want to share it. Thanks a lot, everyone. Have a good afternoon. Bye-bye.
Thank you. Bye, everyone.